My name is Andrew Stotts, and I want to ask you a question. Is Microsoft a buy or a sell? On the one hand, we have the argument that there's a huge amount of growth coming in AI and many other areas, and Microsoft's positioned to capture that growth, and therefore its PE is high because there's a lot of value there. On the sell side, we have the argument that, hey, we're getting into bubble territory. You buy a stock at this level of PE, you're never going to make long-term money out of it. Today, two of my students are going to help us to try to resolve this. These are two students from the Valuation Masterclass Bootcamp. Let me introduce you. You can see Panchampu and Vito. They're going to be debating Microsoft. Is it a buy or is it a sell? This is part of what we go through in the Valuation Masterclass Bootcamp to make sure that we are truly learning valuation. So without further ado, I'm going to bring them in to this room. Here we go. All right. How are you guys doing? You ready?
Yes, I am.
More than ready.
More than ready. That's good. That's what I like to hear. Okay, so let me just get started again, just to remind everybody, these are Valuation Masterclass Bootcamp students in this debate, and go easy on them. They're students. They're still learning. This is part of their learning process, but I want to say I have a lot of high expectations. The company that we're going to be talking about is Microsoft. Let's go through a little bit of detail to get you up to date. It's an American, of course, multinational technology company headquartered in Redmond, and it was founded in 1975 by Gates and Paul Allen, and it's known for software, cloud computing, hardware, and enterprise solutions. It's one of the big five global tech companies alongside Apple, Amazon, Alphabet, and Meta. And Microsoft's biggest moat is its ecosystem lock-in. Windows, Office, Azure, LinkedIn, and Teams integrate deeply into personal and enterprise workflows, making switching costly. 43% of total revenue comes from the cloud, as we can see. That's mainly Azure. And we can see the productivity and business processes bring 33%, and then personal computing brings in 24%. Let's look at the share price. Well, we've had a bit of a rally from about 400 up to about 550 or so, and now it's coming down a little bit. Let's look at analyst recommendation. Now this says for Fastenal, but actually I think this is for Microsoft, so a little mistake there. And we can see there are 23 strong buys and 37 buys. So the rating is 1.7, so just a little bit above a buy, between a buy and a strong buy. Upside target price is 605. That's a 17% upside. And people basically are expecting revenue growth to stay the same, margins to pretty much stay the same. It's incredible what Microsoft has been producing. So that gives us a picture of consensus. Let's look at our world-class benchmarking scorecard. It's a scorecard I designed many, many years ago that helps me benchmark any company against its global peers. When we benchmark Microsoft against 620 large infotech companies worldwide, we can see its dominance is in expense control, which is net margin. Net margin is just out of control. It's interesting that asset efficiency is so low. You would think that this is a company that is asset light. But the fact is, it's got a huge amount of cash sitting on the balance sheet. Now let's go to our global stock tracker. I put in the QR code because you can download this global stock tracker and get it updated every single week. I mail it to myself and I mail it to you so that you can keep track. Let's zoom in on that a little bit, and we can see Microsoft's got a market capitalization of 3.7 billion. It's about $3.5 billion in trading volume. Net profit margins at 36%, ROA 20%. PE is 37, price to book's at 11, and EPS is growing at 16%, and the price has gone up by about 46%. So Microsoft is at the top of infotech, software, and services. Let me introduce you to our students. So Panchampu is from Bootcamp 22. She's a staff anesthesiologist. Wow, even doctors can join the Valuation Masterclass Bootcamp. And she's a licensed financial advisor with Phenomena. She holds an MD from Chulalongkorn University, a diploma from the Thai Board of Anesthesiology, and SEC certification as an investment planner, blending medical expertise with financial advisory skills. Goodness, smart. All right. And here's Vito Alexandro. He is also in Bootcamp 22, and he's a CFA Level 1 candidate with experience in finance, payroll, operations, and data analysis, and his background reflects both technical expertise and leadership. He's a valedictorian and former commencement speaker. He's held roles in accounting, mentoring, and student leadership while advancing his finance career. Now, the rules of the game. The debate rules. We're going to start with opening argument. Each person will start with the buy story. Will start, and they'll get 3 minutes to present their case, and then the sell side. Then we'll go into a rebuttal round where you'll be able to counter the opponent's arguments, and then a Q&A session. I welcome questions from the audience, and then finally we'll have closing statements. And before we get started, let me just pull that down. Pretty exciting, huh?
Yes.
You guys are like, I'm ready to go. Let's go. All right. I got my timer ready, and let the games begin. I think we're going to start with the opening line. So who's going to go first?
Can I please go first?
Ladies
Okay.
first.
Go for it.
Thank you.
Take it away.
Okay. Thank you for the kind introduction from Andrew. And good evening, ladies and gentlemen. My name is Pan. And I'm here today to advocate you to buy Microsoft. First of all, I can see a huge opportunity for Microsoft in the AI bandwagon. Since we all know Microsoft Word, we all use Microsoft Excel and PowerPoint. Microsoft 365 already owns an estimated 30% market share in the productivity market. By implementing Copilot, it's an AI-powered productivity tool that acts as an assistant within the Microsoft 365. This would improve the workflows of users that increase the stickiness of its customers. Along with the help of a subscription model implemented by Mr. Satya Nadella 10 years ago, a stream of revenue is secured. Also, Microsoft Azure grew 39% year-on-year in fourth quarter this year, ending 30th June. Despite running second in the cloud market with a 20% market share, I think Azure would be able to obtain a larger portion of the market share by creating comprehensive solutions that work well with the technology its customers already have. Given its large customer base in productivity and business processes. Since the cloud computing market is expected to grow at 13% CAGR from 800 billion this year to 1.5 trillion by 2029. So I forecast Microsoft revenue growth would be around 15% CAGR over the next 5 years. Seeing the opportunity, Microsoft is undertaking this very seriously. As it is investing largest ever in AI infrastructure, Microsoft cost of revenue is 87 billion this year, invested heavily in AI and cloud infrastructure, including data center expansion, which is the backbone of the clouds, expected to serve the growing demand for the AI market. Although the scaling of AI infrastructure would decrease gross margin by 1 point this year, from 69.8 in 2024 to 68.8. It is still a very good number, and despite that, the EBIT margin has consistently increased over the years, rising from 37% in 2020 to 45% in 2025. I forecast the EBIT margin will continue to grow to 47% in 2030, attributed to the efficiency gains in Microsoft Cloud and Azure. Yeah, that's my first round.
Vito, you ready?
Yeah, I'm ready.
Let's do it.
All right. Thanks, Andrew.
Yep.
Investors think Microsoft wears the AI crown, but the truth is that crown is slipping. What appears to be leadership is often just pseudo leadership. Take Copilot, for example. It is loudly marketed, but its adoption is still modest compared to the hype. That's why we need to look deeper at three layers: valuation, fundamentals, and competition. First, valuation. Microsoft trades at about 37 times earnings. Compare that to 20 times 5 years ago when growth was stronger. Google trades at 24 times. It's cheaper, yet with arguably more AI upside. Microsoft now trades more than one standard deviation above its 10-year average multiple, signaling how overheated sentiment has become. 5 years ago, investors buying Microsoft got about 4% cash flow yield. Today, it's only 2%. And it's not because cash flow collapsed. In fact, Microsoft is generating more cash. The problem is that the stock price has risen much faster while rising spending on data centers has eaten into free cash flow. In my view, investors are now paying much more to get much less. Second, fundamentals. Yes, Azure grew nearly about 40% last quarter. That's an impressive but costly achievement. CapEx was almost $30 billion in one quarter and over $80 billion for the year. Compare that to $16 billion 5 years ago. Meanwhile, free cash flow margins have slipped from about a third of revenue in 2021 to under 30% today. I think this shows Microsoft is stuck on a treadmill. It must spend more and more just to keep pace. And the implication is clear: if growth cools even slightly, profitability will crack under the weight of this achievement and investment. Third, competition and risk. 6 months ago, Microsoft looked untouchable in AI, but recently, OpenAI signed a $300 billion deal with Oracle, which is projecting 77% cloud growth this year, has a $455 billion backlog, and is even partnering with Google. Even OpenAI is hedging. Its revenue share with Microsoft and partners is set to fall from 20% today to just 8% by the end of the decade. So, when you put it together, Microsoft is more expensive than its history. Its fundamentals are stretched by massive spending, and its AI leadership is being challenged. The catalysts for downside are clear. If Azure growth slows, if margin compress, or if rivals like Oracle continue to win deals, the stock will reprice quickly. Yes, Microsoft could keep outspending rivals and maintain its momentum, but I believe that scenario is already fully reflected in today's price. That is why I recommend a sell.
Excellent. Okay. So just for the audience here, the next thing we're going to do is the rebuttal round where each side will have 3 minutes to counter the opponent's argument. But ladies and gentlemen at home, you can participate too by submitting your questions. We're going to have a Q&A session after the rebuttal round. So let me shift around the screen a little bit so I can get the speaker up into it. There we go. Okay. So Panchampu, why don't you then go into your rebuttals as to what Vito says and other things that you want to share. Are you ready?
Yes, I am.
Let's rock it.
Okay, so why does Microsoft need to shift to AI and cloud? And would that hurt the margin? Let me take it this way. Productivity is something Microsoft has been doing for half a century, since 1975. And we all been using Excel and PowerPoint. That is like a mature state for the company in this segment. It is pretty much saturated. Not much of an expansion can be done. But how can a company like this be growing double digits in revenue in every year, and it is doubling the revenue every 5 years? I think it is the ability to expand into the new market, and that's what they're doing with cloud and AI. Although the expansion needs investments, and who's the fastest to grow the market share? Despite the heavy investments that make gross margin drop slightly, the bottom line is always strong. EBIT margin is growing, net profit is staying strong at 36%. While Microsoft is second in both productivity and cloud computing, but it is still large in both segments. Amazon Web Service and Google Workspace do not have the advantage of having a large market share in both worlds. Um, so, for example, Google Space owns a 44% market share in productivity, but only owns 12% market share in clouds. So if Microsoft is able to develop technology that synchronizes with what their customer are already familiar with, their large customer base would be the lever. And if you take a look in the market share of cloud computing, Microsoft Azure is slowly catching up from 15% to 24% market share in 6 years, while Amazon Web Service stay at roughly around 30%. Another thing is that Microsoft has a negative cash conversion cycle. To elaborate, Microsoft has been able to reduce its inventory conversion period from 21 days in 2022 to 4 days in 2025. This was supported by cloud computing, which provided better inventory optimization and supply chain management, allowing the company to operate on a negative cash conversion cycle of minus 58 days, compared to the info tech sector in developed countries of positive 62 days. This allows Microsoft to stay strong in these challenging economic conditions. They allow the increase in receivables caused by its customer decreased ability to pay. My view is that Microsoft will be able to maintain its efficiency despite the increasing complexity of products emerging in the future. So talking about the OpenAI MOU with Microsoft, to my knowledge, the final detail of the MOU is not reviewed yet, but this is to convert OpenAI to be a for-profit company. Ultimately, I think that Microsoft will only sign the MOU if it would be beneficial to the company.
Okay, great. So some of the things that you've mentioned is, a half a century of dominance, and you could have bet against Microsoft many years ago, and you would have been a loser in that bet. The negative cash conversion cycle is interesting because as it expands, it's generating cash. And so those are some interesting rebuttal points. So Vito, why don't you take it away and let's have you come up on stage and let's hear your rebuttal.
All right. First, I want to say AI today is kind of treated like a genie in the bottle. Investors believe it will grant every wish, from productivity gains to new revenue streams. But the real challenge isn't rubbing the lamp, it's keeping the genie loyal. When the talent war is heating up, for example, Google, Meta, and startups are all hiring aggressively. And even OpenAI is hedging with Oracle and Google. We don't see Microsoft getting big names and improving their team on AI and its adoption. Next, Microsoft again with its long history since 1975, and I love the Bill Gates story. I came from Washington for my college. Microsoft is celebrated as an innovator, but its biggest moves right now have come through buying or partnering. Azure follows AWS, its second. Gaming needed Activision, and they got Blizzard last year or 2 years ago. And then AI needed OpenAI. That's not organic invention. It's what I would call renting the spotlight. And rented spotlights can be switched off when rifles choose different stages. And to come back to my story, a strong story at the wrong price is still a bad investment. You can have the best house on the block, but if you pay double its fair value, you've locked in disappointment. Microsoft's story is good, but at 37 times earnings with slowing growth, investors are paying champagne prices for a soda stream of returns. And to keep it relevant, I think most investors now are anticipating possible interest rate cuts. How will that affect my evaluation of Microsoft? Well, I think rate cuts are like a sugar rush. They give a quick high, but they don't fix the diet. Microsoft's valuation problem isn't about interest rates alone. It's about fundamentals that are getting harder to justify. And then the heavy capex and big acquisitions. They're like, for me, putting a painkiller on an injury. They provide temporary relief, masking slower adoption or competitive pressure, but they don't address the root cause. If the company keeps relying on these quick fixes, the long term strain on margins and returns will start to show.
All right. So You mentioned about talent war. You mentioned about Microsoft not really getting big names these days. Also, growth not necessarily being organic. You could counter that by saying, well, yeah, but they bought LinkedIn and they got growth. But you could also counter that by saying there's more innovation going on, maybe with some of the peers out there. And then you've argued that it's the wrong time. So now let's move into our Q&A session. So hold on, let me just set my top timer. So let's first go with the first question. And where do you see the most significant opportunities for Azure to continue taking market share from AWS? Are there specific areas where its lead is widening? And maybe Panchampu, why don't you take that, since that's talking about the potential for growth? What do you think about that?
I think due to the customer base and the productivities, if Microsoft can develop technologies that allies or what their customer already familiar with and integrate that into the ecosystem, it would be so much more to the company, as AWS cannot do that.
Okay, and Vito, do you have anything you want to add to this question?
No.
Okay. All right. So let's look at the next question, which is from SuperKid. If a company that builds AI models like OpenAI and others shift to Oracle, what's left to Microsoft Azure still having a moat? What is the value proposition?
Well, to my knowledge, MOU is not reviewed yet, but Microsoft is a major investor in OpenAI since 2019, and it's been revenue sharing arrangement since then. So, once Microsoft was designated as OpenAI so compute provider, it's now I think it's gonna lessen its grip a little bit, but ultimately, I don't think the Microsoft will sign the MOU if it does not benefit the company.
Okay. And we got another question here. This question is, what do you think about Microsoft's historical record of poor asset utilization? Wouldn't this be quite impactful in terms of valuation? So asset utilization, as I showed on the world-class benchmarking scorecard, is ranked at an 8, which basically means it's not very strong relative to global peers. But as I also mentioned, there's a lot of cash on that balance sheet. And the cash, you could argue also, it's a drag. And so that can be a drag on ROA and on valuation. But on the other hand, it means they've got this war chest that they can really buy almost anything. How do we reconcile that? What are your thoughts? Maybe Vito, you can chime in on that one.
Yeah, sure. Looking into company data and its 10K, I think the cash is used to preserve capital. That's what they say. And some of them are also used to fund future acquisitions. Um, I don't see them changing that behavior and pattern. I think they'll continue to acquire new companies, especially with the AI boom. They'll find startup companies who integrate into Office or other productivity products, and they'll include that into like Copilot or Excel, for example. We can use Copilot function now.
One of the questions is about Copilot. What is the strength of that? I don't understand much about what's powering it. Is it they're internally been developing that, or are they partnering with OpenAI or others to get the technology for Copilot?
I believe it was internally developed. It's part of their R&D, and it's used mainly to prep meetings, create meeting summaries, and also to create PowerPoint presentations from essentially a memo. And as I said before, it's highly marketed, but there's only few players that are really using the app and putting it into use.
And how would you counter the argument that it's being in the infrastructure of Microsoft, you know, for many people, they're like, I don't care. I like it that it's in the infrastructure. I like that I have control over, you know, what my employees are doing with internal data through Copilot and that type of thing. How do you counter that argument? Maybe Vito, just let me know your thoughts about, does, you know, part of your argument sounds like Copilot just doesn't have much to it.
Right. And it's mainly because it's very exclusive to Office users, especially with Teams bundling. And most employers who use Copilot have not integrated enough to their day-to-day work experience.
And you could probably argue that about many different AI tools. Panchampu,
Right.
do you have any comments on the quality of Copilot? I don't know much about Copilot.
Well, I think it's an area that needs development furthermore. There's some vast variety of AI can be beneficial to us. For example, in my field, since I am a doctor, I think AI can help us with how we approach the patient. We can start talking to the patient and not worrying about note taking. Well, that doesn't happen yet, but it needs development.
Okay. And we got more questions coming in. Superkid says Microsoft's CapEx, 48% of its operating cash flow. Why? And massive cash position. At what point is it considered too much? Which one of you would like to answer that? CapEx is huge. I mean, that's pretty fascinating to see what was a tech company kind of becoming more of a physical, you know, physical asset company. But
Right.
what is your thought about the CapEx? Maybe Panchampu, on your side, what are your thoughts about CapEx, and could that slow down earnings growth?
I think they need to invest because whoever secure the market share first just wins the race after all. And yeah, but they still have a lot of cash to do so. Their debt is so low with a debt to equity 0.3. I think that is justified.
Okay. And Roman says, what would be the single biggest threat to Microsoft's growth? This is more, there is a move towards open source software in Europe, mostly by German and Danish local municipalities adopting Linux OS. Do either you guys have an answer? Maybe Vito, do you have any thoughts on what's the single biggest threat to Microsoft's growth?
For me, I believe it's new players coming into the game who are taking in the AI space, and it's a new high growth industry that there's a lot of untapped areas and a high ceiling for small companies to even grow and become the next Microsoft, for example, like we saw in Palantir in AI and defense. And we might see another emerging companies that will gain more market share.
And one of the counters to that is that they have so much cash that if one of these companies is really good, they just buy it and they
Right.
incorporate it into the system. So, and that's something, you know, you're never going to know, but it's a possibility for sure. Moment says, do you think there will be no room for creativity for Microsoft anymore? Stock's been up over 30% recently. What was the reason and why that could be the peak? Why is the share price at a peak? And Vito, since you are on the sell side, maybe you can tell us why it's a peak.
Yeah, I think Microsoft has really excellent price momentum. We're looking at 30% increase for the past 6 months. And it's, I think, mainly driven by its new, actually, let me put more thought into it. I don't have enough research to say it, and I don't want to.
Okay, let's move on then. Yep. And Jean Moran says, interesting, and thanks for sharing the video. Okay, so let's go on to Pichia says, I agree that AI will boost Microsoft to double growth, but how will Microsoft maintain this growth level 5 to 10 years? It's already absorbed into the price. Can you sell any idea that Microsoft can continue 20% growth? Well, Panchampu, that's your that's your answer that you want to give to that.
I can highlight that again, that Microsoft have a base of their customers in productivities, and they could expand their customer from that. They can build something that is integrated to what they already have, and that would be massive because
Yep.
there's a Microsoft 365.
Okay. Well, we went a little over on the Q&A section because we got a lot of good questions. So now let's go into our final closing arguments. Each of you will have 3 minutes to do your closing arguments. So let me reset the clock here. And Panchampu, why don't we have you go first? How about that?
Okay. To wrap up, it's a buy recommendation from Microsoft based on a target price of 571, and that is a 12% upside compared to the current price of $509 US. This is derived from the free cash flow to the firm base valuation using a WACC of 9.5% and a terminal growth rate of 3%. To highlight that again, that my supporting evidence are there's a huge opportunity for Microsoft in the AI and cloud computing market, as it is able to expand through its customer base in productivity, and it is something Amazon Web Service could not do. And Microsoft is taking the opportunity very seriously by taking its largest ever investments in clouds and AI infrastructure. As Mr. Satya Nadella confirmed to invest 75 to 80 billion this year in response to the President Trump's asking tech leaders to invest in the United States at the White House dinner earlier this month, which that is something the company has already been doing. And I even forecast to grow 7 billion in the next 5 years. And finally, Microsoft achieved agility in cash collection, and the bottom line is always strong. EBIT margin is strong, and net profit margin is always strong. Well, there's might be some risk, including cybersecurity risk and non-performing investments in other businesses, and the high competition in the technology industry. But as I said earlier, I think Microsoft will be able to get away with that, as evidenced by Azure is slowly catching up Amazon Web Service, sorry. And the occurring topic of OpenAI signing MOU to part ways, I don't think that's the case, because I think Microsoft will only sign the MOU if that would be beneficial to the company. They would discuss that and review that later. So overall, I think this might be the right time to buy Microsoft. Thank you.
Oh, excellent. Okay. So let's bring Vito up on stage and your closing arguments.
Right, and before that, I want to come back to the 30% increase in stock price for the past 6 months. I just want to do a quick clarification that it's because of strong financial results, but mostly because of the overheated sentiment. Right. Okay, so for my closing argument, Microsoft has long been the large ship investors rely on, a core member of the Magnificent Seven, a safe harbor in big tech. But the AI boom has introduced new disruptors. Oracle just won a $300 billion OpenAI deal. Google is pushing Gemini, and others are scaling their own models. A rising tide lifts all boats. But Microsoft isn't the biggest ship anymore, and it's getting increasingly difficult to lift the ship to even greater success. Valuation tells the story. Owning Microsoft today is like going to a fine dining restaurant and paying more for a smaller meal. At 37 times earnings, investors are paying peak prices for slowing growth, and the portions keep shrinking compared to just a few years ago. On fundamentals, Microsoft looks like a runner on a treadmill. It has to spend harder just to keep pace. Azure's 39% growth came with $30 billion in spending in a single quarter. And when that isn't enough, acquisitions like Activision or partnerships like OpenAI substitute for organic growth. And when it comes to competition, Microsoft is no longer the only one wearing the crown. Oracle is scaling cloud nearly 80% this year. Google is embedding AI into its search empire. And OpenAI is cutting Microsoft revenue share from 20% to 8% by the end of the decade. Many rivals are reaching for the AI crown, and Microsoft's grip is weaker than it looks. Even Bill Gates once said, "We always overestimate the change that will occur in the next 2 years and underestimate the change that will occur in the next 10 years." Right now, investors are overestimating Microsoft's near term AI dominance while underestimating how competition, capex pressure, and regulation will reshape the industry over the next decade. So, when we step back, the picture is clear. Microsoft is more expensive than its history. Its fundamentals are strained by extraordinary spending, and its AI crown is already being challenged. Yes, Microsoft could keep outspending rivals and maintain its momentum, but that scenario is already fully priced in. Microsoft may look like the biggest ship in the harbor, but the tide is shifting, new vessels are rising, and the risks of crowding are higher than ever. That's why I recommend sell. A rising tide lifts all boats, but it also shows who's overvalued when the waters recede.
Excellent. Okay, so well done. How do you guys feel?
Relief, of course.
Relief,
Really?
sense of relief.
And since this is related to your process in the Valuation Masterclass Bootcamp, how do you see what you've just accomplished compared to when you first started in the bootcamp?
Well, even today, it's a transformation already, which I mean, I have not finished the boot camp yet, but it's so far away from the first day.
Yeah, it's amazing. Vito, what about yourself?
Yeah, I thought of it like as one open door quickly became into 50 more, and I start with less information, but I end up with a transformation instead. And this program demands hard work and perseverance, but it provides a practical hands-on experience and valuable feedback from Andrew and his team. And more than that, it instills a professional work ethic for me that's rooted in striving for excellence. And I really admire the standards of excellence that you put out for the students.
And go back to day number one. Think about our kickoff session on that first night. What was your
Yeah.
first impression when you went through that first night? I'm sure it's not exactly what you expected. I'm curious, what was your feeling on that first night? Like, oh my God.
I
For
was
me,
shocked. I'm
you-
sorry.
Go
Uh,
ahead, Kanchanpu, go ahead.
and I was overwhelmed. I do not understand a lot of things, a lot of terminologies, but the team are very supportive. Even the students helped me a lot. Of peers are very nice here, and it's a great experience. The experience itself is worth it.
Yeah. And
yeah, for
Vito?
me, for me, it was daunting. I felt like I need to take a dive into this pool that I didn't know what I was going to sign up for, but it proved to be an excellent and very fulfilling experience.
And you've got some great feedback. Moment says, well done. And Lee says, awesome work. And Roman says, great closing arguments from both sides. And Subicat said, magnificent debate from both sides. Moment closing with awesome. When you think about the, let's see, we got another one here. Yeah, you guys are doing really great. When you think about the Valuation Masterclass Bootcamp, I like to think about this book right here. Hold on, let me get this book. Many people know the book Start With Why by Simon Sinek. And my why is to bring a transformation to people that leads to lasting change. And seeing the transformation that you guys have been going to is, amazing. And there's still more transformation you're going to go through. But when you finish the Valuation Masterclass Bootcamp, you're going to really feel proud about the accomplishment of what you've done. So I want to congratulate you for stepping up to the stage. We're gonna, yeah, well done. I know it's a challenge, and I'm gonna take you out of the group now, and then I'll bring you. I'll talk to you in just a second. So hang on. Thanks and well done. That was pretty amazing. You know, if you want to build a competitive advantage in company valuation, join us in the Valuation Masterclass Bootcamp. The next bootcamp starts in less than 50 days. So go to valuationmasterclassbootcamp.com and I'll see you there. My name is Andrew Stotts, and I hope that you build a competitive advantage in company valuation.